Rob, I saw your tweet the other day. You said, as you can tell, I'm not a fan of these public crypto treasury strategies, which are clearly just point-in-time solutions that have no reason to exist over any reasonably mid to long-term time horizon. So maybe you can expand on that thought.
Yeah. So
that's why we call him Spicy Rob.
I didn't know
we did call him that, but I can start
well,
using that.
Like, as a matter of fact, I did not know that, and I wish I knew that.
I didn't either. We're all learning.
We can make that stick, Rob. We can make that stick.
Yeah. Okay. I can't wait for that. Thanks, Diogo. Listen. They make perfect sense for the right pool of capital who wants to trade into these things. And what do I mean by that? I mean, you're very likely to make money because you trade into you give these people $300 million and they lock you up for 40 days, 30 days, maybe 60 days, very short periods of time. They go out and they say they're going to buy, an asset that you are maybe long that asset anyways. And in some cases, they're taking in-kind contributions. So it's almost a way to monetize your ETH or your Bitcoin or whatever else, because you can send that to them and then take this, lockup. And, they're mostly trading today at, some premium to NAV, anywhere from, a little bit over 1 all the way to, I think SBET, when I looked yesterday, was 10 times premium to NAV. And this usually has something to do with, what the exact capital structure looks like, but also, who's on top of it. And if there's a lot of excitement around, a specific person or a specific group that is running this thing. But over time, these are going to trade back down to NAV. And in a distressed market, they are probably likely to trade below NAV. Many of them are anyways. And you can get yourselves into a situation where, depending on how you finance this thing, especially if there's debt involved, where you may need to sell the underlying to pay off your debt. And which means that because then your value will go down, and you may have also people converting into equity and diluting the broader shareholder base. You get into this situation where you're in a death spiral. And that's going very likely to happen for some of these vehicles over, certain types of market cycles. And so I don't think they need to exist, but I understand why people are doing them to make money. I don't think it's right for our pool of capital, which is why we haven't invested in them.
Rob, we could have been sitting here talking about the exact same playbook happening for MicroStrategy 2-3 years ago, and it didn't. So that would be the pushback, that someone would be like, wait a minute, this clearly hasn't played out for MicroStrategy. So what would you say to that? I ascribe to your view, which is 99% of these vehicles unwind really nastily and trade below NAV in a down scenario. We're not there yet. But what would you say to someone that's pointing a MicroStrategy that has clearly defied gravity?
Listen, I think if you point to a single example and then you abstract that out to what is happening now, which is a significant amount of new vehicles that are all capitalized somewhat differently, that are loosening the lockups, that are, in many ways, usually the offerings are kind of looser and are more, or they're more punitive on the actual equity holders. It's clearly there's a mania and people are just trying to monetize. By the way, people had the same conversation about the GBTC trade, way back when, right? And there was many people who was like, hey, listen, the premium has existed for 2 years. Why would it ever not exist, right? And then all of a sudden it blew up Three Arrows and, a couple of other funds, and we know what happened then, right? And so I think it's the wrong conclusion to look at what Saylor has done and incredible. He deserves all the everything we could say about him. That's good. And then say, okay, well, all these other people can do it on all these other assets in all these other ways, and that we won't have adverse selection.
Yeah. Well, by the way, my view here is mimics Rob's, but I think it's simpler, which is it's a trade, and I'm a venture investor, even though, I'm not really, but I'm
there you go. You said it.
Capital.
Not an engineer, he's a venture investor.
But it's a trade. And so I think we have to tell ourselves the real story is the right holding period for Bitcoin was 15 years. The right holding period for Solana was through FTX all the way to the other side. And so as a venture investor, we're not looking for trades. I do think in crypto, you get early liquidity and maybe you have holding periods that are not 10 to 12 as the private markets are kind of aiming towards maybe closer to 7 to 10, but still you're taking a long-term position and you're working with these teams and you're trying to help them out. At least that's that's the pink view, rose tinted glasses view of venture that I very much subscribe to. That's what I have fun doing, not really doing trades. I think in crypto, because everything trades, everything becomes a trade. But I do think that there's different vehicles for that. There's people that are going to make money out of it. There's hedge funds. There's all these things. As far as we're concerned, we're venture investors, and yes, we have a liquid portfolio because a lot of the value capture happens in liquid tokens, but we still look at holding periods that are venture holding periods.